Hello, everyone. Welcome to the Oregon Executive MBA presents What Your CFO Wants You to Know with Tyler Sloat. Um, as a previous Oregon Executive MBA alumni member, the alumni does a really good job of hosting physical and virtual events throughout the year like this. Today, we're excited to have a pretty large audience of both current and past University of Oregon, Go Ducks, students. So welcome, everybody. In today's Q&A session, we have Tyler Sloat. A little bit of a background on Tyler Sloat. He's the CFO and Chief Operating Officer of a company called Freshworks, which I also probably should be a big disclaimer, happen to work for. It's a publicly traded global SaaS solutions company. They provide AI first, kind of ludicrously easy to use customer and employee experience software. So that's the sales pitch for Freshworks. Tyler has over 25 years of experience in finance and operation roles for SaaS, software, hardware tech companies, ranging in size from a very small startup up to Fortune 500. He joined Freshworks, I think, in 2020, expanded his role and actually became the COO and CFO. I think that was this year. And he oversees accounting, finance, cybersecurity, information technology, corporate strategy, RevOps, revenue enablement, and I think even chooses the coffee flavors in the coffee bar. Previously, he worked as CFO at Zora. Zora is a payment company. He was there for about 10 years. It was a subscription payment company. He took them through IPO all the way through growing their AAR, annual recurring revenue, at a 20x and raised over about $200 million in capital. So he's got experience with capital fundraising and IPOs. Prior to Zora, he was a chief financial officer at a company called OboPay, which sounds a lot like Globo Gym, but let's not go there. Was it no relation? No relation to Globo Gym from Dodgeball. But he was integral in raising over 100 million in investment and strategic capital, did their mobile payment service, deployed it across 4 countries, across 3 continents. So he's got a lot of experience, and he's been at NetApp, Siebel Systems in his past. He's a registered but inactive certified public accountant in the state of California. He has an MBA from another school that's not Oregon called Stanford. You may have heard of it. And a BA from Boston College. And he has also served on the board of directors of Owanda and Compass Professional Health Services. That was a mouthful. So that's Tyler. I'm Jason Loomis. I'm your host, OMBA class 25, proud duck and proud to be here. So let's just start. Tyler, give us a little bit of background besides that long soliloquy I just went off on. Tell us about yourself and how you got to where you are.
No, thanks, Jason. I think everybody should know that, when Jason and I were talking about this, the first thing he reminded me of is that all the schools that I have affiliation to, none of them are ranked number 1 in football right now. So, he that was the first thing he wanted to make sure that we touched on. Look, I feel very blessed in kind of my corporate journey. I was, an econ pre-dental, which is the same as pre-med undergrad at BC. And I took a job with this firm, Coopers & Lybrand, which doesn't exist anymore, in what was called their Computer Assurance Services group. So it was a subset of audit, but it was really like doing IT internal controls before SOX existed. I'll date myself. This is in, the 90s, not late 90s even. I did that for 2 years in the Boston office. To be honest, I had very little. I learned a lot, but can't say I was incredibly good at my job because I still didn't really understand everything that was going on. They just trained me and never had any background. I transferred out to the Bay Area, California, and I transferred into audit, and I transferred into the life sciences and emerging company services group out of San Jose. I had never had an accounting class at that time, and I'd been with the firm for a year, I guess. I remember reading a fundamentals of accounting book before in the parking lot before I walked in for my first day. Immediately figured out I was going to learn a ton on the job. I had to send myself back to school, so I enrolled in a night class at San Jose State, fundamental accounting 101, and then worked for a year. Just I happened to be on back-to-back kind of deals as an accountant. Which is great. And then convinced my partner to send me back to, they had this program called Cooper's Academy at USC for, I think it was either 8 or 10 weeks during the summer. And you went to school 6 days a week, like 8 hours a day, and you got 12 graduate credits. And that's how I got enough to go take the CPA exam. And I don't know. The moral of that story is I, I grinded. It was fun. We worked really, really hard. Uh, and I kind of used them as much as they used me, I guess I would say, because I was able to, work really hard and probably produce a lot of revenue for Coopers, but at the same time, I was able to get a CPA out of it. I didn't want to be a partner in an accounting firm. I decided to leave. I went to a company called Poet Software, which again, these are kind of, I don't know if they're luck or you're blessed, but Poet ended up being the controller there. We ended up taking that company public in the late 90s, and had just kind of a kind of one of these .com runs before the .com thing totally hit. I remember we went public at 1250 euros. It was a really interesting deal. It was a Europe. We were headquartered out of Germany, but we had raised a bunch of money in the US and in Europe. I'm sorry, we were headquartered in San Mateo, but our biggest offices in Germany, but we had a bunch of European money. We decided to go public on the Neuromark, which is a subset of the Deutsche Börse. But we also filed with the SEC and went through a full S1 process. So we were traded, we were able to be traded in both. We ended up going public at 1250 euros. We had a deal with Reba and Commerce One at the time with some XML marketplace technology that we put out. And an analyst came out about a month after we went public and said, hey, these guys should be, valued at over $1 billion. And in 3 days, our stock went from 1250 euros to 200 euros. And we had not put anything out, right? These are my first real forays into kind of market dynamics and how everything works. I was a controller. I wasn't the CFO. And so I was a little bit more a bystander and watching all this happen, knowing that, hey, this isn't really deserved. And we couldn't say anything because we were actually in a quiet period at that time. Regardless of all that, the company, did okay, ended up getting bought eventually, but it afforded me the capability to go back to school. And as Jason mentioned, I went back and got my MBA. And the whole purpose there was, realizing that accounting and finance, it could be a job and a career, but that actually isn't what drives companies. What drives companies is business model, which really is related to that, but is more about the finance projection part of it and the operations on how you get there. And that's really what I've tried to focus a lot of my career on since, really taking roles that are much broader than finance and really trying to own things that could actually truly influence the business model. Freshworks is my 5th private company I've worked for. I just mentioned Poet Software. I went to a company, Decrew, which is a hardware encryption business. And I ran all the finance and ops for them. We sold that to NetApp. That's how I ended up at NetApp. Decrew is a private company. I stayed at NetApp. They asked me to be controller of the emerging products group when I joined. Decrew is one division of 5 that was under me. I left there for my first CFO job at OboPay. OboPay was a super fun, cool company to go work for. It's just ahead of its time. It was a mobile payments business. And we ended up trying to sell the business, ended up not selling it, but taking a lot of, had a great partnership with Nokia. From OPay, I went to Zuora. I joined Zuora as a CFO when they were about 4 million in ARR. Through 10 years there, I ended up kind of running every function except for engineering at one point in time. And really felt like I helped build that company as opposed to Freshworks, where I came on board and we were already a sizable business. Just needed to kind of look at a lot of infrastructure and back office operations and really get us ready to go public. And so I joined Freshworks in 2020. At the beginning of 2020, we took it public in November of 21. I'm sorry, September of 21. And we've essentially just kind of gone through multiple years on our public journey, and which has been super fantastic. So that's kind of my career there. At the same time, I've tried to work with some smaller companies. Jason mentioned Wanda and Compass. I've advised a few other companies on top of that, and really get very motivated by how do you drive a business to go achieve certain results, specifically through looking at different operating tracks, looking at different operational kind of nuances that you can provide, and putting together a business model, which is not a budget, that really will drive for that behaviors. And that's kind of what gets me up in the morning.
That's great. Thanks, Tyler. There's this is a great segue into, so I've broken out kind of, I want to talk a little bit about your CFO role. I want to pivot a little bit to your COO role. might talk a little bit about leadership too towards the end. And then some of these questions came in from the audience. One of them was, which actually ties in nicely, is somebody was asking, what steps can employees take to improve financial literacy within the organization? And not all of us can sit in a parking lot and read a book the day before. What are ways that you recommend to students that may not be in the FP&A department or the accounting department to get some literacy?
Yeah, I think it depends on the level of transparency that the company provides, right? I've always been a proponent of trying to be as transparent as possible with the employee base. To really, and again, when I think about business model, I'm not thinking about a budget. I'm thinking about, okay, what are the drivers of a business and the success of that business? So, I've always been a proponent of at the end of each quarter, as a public company, really kind of making sure you have an all hands and, sharing what those financial metrics are that you just disclosed, but also providing the context as to why you disclose them and why are they important for an investor, which is an external perspective, and what would drive potentially, value, which is, in your share price. For private companies, the information tends to be a little bit more available. And for individuals working at private companies, I think my advice would be, go spend time with those finance departments, so specifically any kind of person in finance, and think about outside of the budget. So when we're talking about like a financial plan for the next year, don't think about how much headcount you get and what you might be able to spend. Think about what are the drivers for performance, and how do we actually design for those drivers. The thing that I get surprised about here at Freshworks is where I feel like we are being really transparent. We push, a lot of information out there. When you really dig into it, so many of our employees don't actually go look at the stuff. And so, like, if you look at our website, every public company has to have, in the US, has to have an investor site. And on that investor site, which is tied to your corporate website, you have to file, you have to post all the stuff that you've put out. And there's a variety of reasons for it, right? But one of them is Reg FD, which you want to make sure that all the information that you put out there is available to everybody. And so on there, like, we have earnings next week. Our earnings press release will be on there. Our entire script will be on there. There'll be kind of probably a webcast review of the actual call that we have. And then our 10Q will be on there. And then also any kind of other SEC filings. To start, anybody joining a company, if you're joining a public company, you should be reading that script or listening to that call to get a sense of what is that company trying to achieve and how are they saying they're doing against it. It might feel super high level, but at the end of the day, like, earnings calls and things are like, they're very purposeful, and they really are trying to describe what a company is doing. If they're not, then you're going to the wrong company. So that's the first thing, right? Go look at what everything is available. The second thing is dig in with whatever your function is and really try to understand, for the amount of resources that are being spent within that function, what are you trying to achieve? And then start to dig into other functions. That's how I would start with the financial literacy component of it. I was thinking just like, look, I wake up every morning and I put CNBC on. And it's just like my habit. I have my first cup of coffee. I look to see what the market's doing and blah, blah, blah. I think that might sound dull, but it actually just gives you an overall kind of perspective on what's happening out there and what is driving the market. And then you get highlights from certain companies. And if you just kind of watch over and over again, then you kind of get to see the themes. And it's all about finance, right? But the reality, it's all about performance. And so, I just think you should spend some time doing that as opposed to the other 5 or 10 minutes that you have each day that you might waste.
You're falling for all my tricks, because this is just a perfect segue into my next question. You just went right into it, and you kind of highlighted it, but I thought maybe you could throw a little extra color onto it, speaking directly to the department leaders. What advice do you give to department leaders who are seeking to justify budget? Because you're CFO, so people are going to come to you, Tyler, I need an extra blank dollars for this project. What advice do you give to them? I think you kind of just gave it, but if you could highlight again in the context of a leader asking for budget, what would you say how should they approach that?
Yeah, it's interesting. I like a long time ago, I moved away from what would be considered a traditional budgeting concept where everybody goes, hey, what are my goals, say, for next year? And here's what I need to do to resource to go kind of hit those goals. And then I come back in with, a big ask, quote unquote. And traditionally, a lot of companies ran this type of process. You start it 3 or 4 months before the end of the year. And everything comes in and it's way over what you can afford, no matter what. And then it goes to an ivory tower where like a CFO and a CEO, they go back and be like, I know you asked for 100, you get 80, right? And then they're like, well, geez, then what do I do? So like, what was the whole point of that whole exercise? Taking that away and really try to design, we're not great at it, and Jason knows this, but more of a zero-based budgeting approach. You have a set of resources today. What can you do and what can you drive with that set of resources? Because it shouldn't be the same every single year, right? You should be really challenging yourself to become much more efficient with what you have to be able to accomplish this more with the same amount of resources. Then, if you need to do more, and how do you prioritize that need? Then the request comes in, is like, okay, I'd like to fund these things, but here's the business value of what I'm trying to fund. Some things are not going to be tied necessarily to revenue, right? They could be tied to something around a different efficiency. They could be tied to risk. They could be tied to something else that would have a lot of business value, but may not be topside revenue value. But the articulation of why investments make sense is completely different than I want more budget. And if you put everything in context to why is this going to help the business, right? Then there's a way for somebody like me to digest it and figure out whether this is something that makes sense. And again, go back to the business model as opposed to the budget.
That's great. I want to pivot a little bit to your chief operating officer role. In fact, this is a question from one of our former students, might be a current student, Max Green. Give a shout out. Thanks, Max, for the question. What would you give to someone with COO experience that's wanting to get into the opposite that you did, going from CO, from operations into finance? Any recommendations or advice you'd give them?
Yeah, I think these things are so tightly entwined together. I really do. If you look at the financial realm of a company, it goes across a pretty broad spectrum. So when I think about finance for internally for us, what does that mean? At one side, there's accounting, right? Which, okay, maybe you can get to accounting at some point. The question is, why do you want to get to accounting? But accounting, really is okay, backwards looking, and it's much more about compliance and governance, and making sure you're, operationally doing a bunch of things. That could be paying bills, it could be collecting revenue, that could be making sure people get paid, all this kind of stuff, statutory filings, all this kind of stuff. Next to accounting, there's finance. And finance and accounting are very, very different things. Finance, in my mind, is much more about owners of the business model and business partners to different functions. And in owners of the business model, they're really about helping to make strategic decisions about how you deploy capital internally. And that could mean, by the way, not deploying capital, meaning like you reduce deployment of capital. But it's really all about, okay, what are the biggest drivers that we have for the business, and how do we invest in those drivers to get the biggest return? Okay. So that, and again, it's not always about revenue, right? It should always be about maybe some future revenue. It could be about, hey, we're starting up a business unit and we need to build a product for that business unit. There's not going to be any return on that for the next year and a half. But if we do this, this is what we would expect over time, right? So it could be very strategic and a bet that you want to kind of carve out, but it doesn't maybe it will actually take away from, say, pipeline creation and marketing. You've spent those same dollars to get near-term revenue, but the long-term results could actually be much different. So that's why I'd say business model was your long-term business model, what's your short-term business model, it's different than budget. Okay. The next piece of quote unquote finance that I have is IR. And that is, something you really don't need to, you're kind of getting ready to go public or when you're public, and that's kind of a different arm. And then we have like treasury roll through IR as well, which is very related. You then get to this great point. I'm getting to your answer, Jason, where there's operational roles that kind of cross over finance and ops. So internally for us, there's a couple of things. One, order management deals desk, right? They could be owned by somebody who technically is in the finance realm, but they're really go-to-market functions. And they're the ones, looking at every single deal and protecting the structures of deals, which would then at a micro layer add up to a macro impact to your overall business model. These could be discounting. This could be, different types of deal structures on the way you actually put together deals with customers. Another one is sales compensation. So sales comp, in my mind, is half ops and half accounting. The accounting is, okay, how do you account for the compensation? The ops is really, how do you design sales compensation and comp plans that are going to motivate behaviors that then drive the business model? And so these things, when the question about, hey, I'm on ops, how do I move more towards finance? You start to take over some of those gray areas that actually go both sides. And when you do that, if you have a CFO that's kind of like me, you need to make sure that you're putting your CFO hat on when you own the piece that's bigger, closer to the accounting finance side. And that's about, how do I protect the corporate business model? It's difficult because then you also have to put on, say, the sales hat that says, how do I motivate a salesperson? And so that's where the kind of the secret sauce lies, is how do you actually be able to balance both, be able to have constituents on both sides, but then, really solve for what the company needs at the end of the day. As you kind of take over some of those roles and be able to manage both, then the next thing would really be moving into more of an FP&A side of it. And what I have seen is that where FP&A is actually within business units and not necessarily all rolling up to finance, and that's more the business partner in FP&A. If you look at a lot of companies, there's actually like shadow analysts within functions all the time, and they really become the FP&A partners for when FP&A is not there. As that gets closer, then you learn more about the accounting side, because FP&A has to have a big role in the accounting and what the outcomes are. And as you learn more about the accounting side, then you actually could, easily take over the CFO side. And so that's the journey that I would progress through if I was trying to accomplish that.
Gotcha. Thanks for that. I want to hit on something you brought up about like short-term versus long-term goals. Do you feel this is kind of a leading question, but you feel free to answer openly because I may be leading it. I don't mean to. Is there more pressure on public companies versus private for that short-term goal results, that for like, hey, I got to hit these quarterly results, so I have to, hit that stock price, this versus if you're a private, you might be more long-term goal oriented? Is there a difference?
Yeah, no, 100% difference, because for better or for worse, as a public company, you want investors who believe in what the long-term kind of potential is, right? And that's, what you would call kind of, a long only larger fund that it usually has an average hold, 5+ years. In order to attract those investors, though, right, you need to have a lot of consistency and have proven out your capability to go do that quarter over quarter over quarter. If you get a mix of investors, and a lot of the mix happens to be much more short-term focused, folks who have a mixed strategy of long short, right? And when you attract that, there's going to be folks who are making bets against you and making bets for you. Those are always very short-term focused, and by definition, right? Because if they're making a bet against you, it's really, is this bet against going to play out over the quarter and next quarter or the 2 quarters? But if they're doing, margin, if they're borrowing shares on margin and everything else, they don't want to hold on for that long, right? They're very much focused on like a result that's going to be a quarter result. That's the public company dynamic that you always have to kind of weigh. And then you're reporting quarterly. So I'd say 20% of my job gets taken up preparing for earnings, and then doing earnings, and then having all of the tail of activity, whether it's sell side callbacks, buy side, or conferences, after earnings. When you're private, you don't have to do any of that stuff. I mean, like, you probably spend a lot of time, you have quarterly goals, and I'm guessing the board is really driving for results against those quarters. But your output is going to be just for the board meeting, right? And it's like, how did we do? And then you get to focus again on the next quarter, and then you can make decisions that are much more long-term focused that might not have quarterly results, and it actually might be detrimental to a quarter. But if your board's aligned, then that's all you have to worry about, because your stock price isn't going to move up or down. When stock prices move up and down, it makes it very difficult to do things. I mean, if you were in a situation where you actually needed capital, it's very difficult to raise debt, right? If you're in a situation where you need to hire a bunch of people, well, that gets really difficult if your stock price is low and you're given RSUs, and those RSUs have a much lower value than what you could afford, if your stock price was high. And so there is true business model implications to performance, and then publicly, what your public value is.
So I'm hearing stay private.
Well,
Different challenges. Kidding.
I don't know.
Yours
Some of the
sounded
companies
easier.
I admire the most are bootstrapped businesses that founders, may have taken some debt on, but never actually raised capital for equity on. And those are the businesses, when successful, probably have the best returns for those founders and employees, right? Because number one, they can stay private forever. They don't have to go public because they've never raised money and they don't have any outside pressure for that. And number two, they can make those decisions, for the long term all the time. The only ramifications is maybe that owner doesn't, get their dividend that quarter. And so, and I think it's one of the hardest things to do is to start a company and really grow it to something. I've never done that, right? I've said if I had the ideas, I'd do it. I don't necessarily have the ideas. So I really feel my value is much more in coming in and helping to operate them.
Gotcha. Thank you for that. I want to ask a question about forecasting. It's always been, especially when you're in an MBA, wait, if a company knows what they're going to do next quarter or for the next year in a forecast, can't they just figure out how to get that number even more if they think that they're going to do 20? So how important is forecasting in what you do? And then how accurate is it, or is it not? If that's too generic of a question, I can be more specific, but let's start with that.
Yeah, I mean, if I step back, Jason, I would just talk to you, or maybe I describe how I think about the cadence of how a company should run from a business model perspective, would then translate into an operating plan, right? So I think there's 4 operating tracks within a company. I think there's quote to cash, procure to pay, hire, retire, and corporate. And within each one of those tracks, there's systems, people, and process. I think you then have a business model that is not about necessarily what your budget is, like I've mentioned. It's really about what are the drivers for performance of the company on really the top side and the bottom side. For a software company like us, the top side is ARR, and the components of ARR are new business expansion, downsell, and churn. And then, so you look at all these things across your 4 operational tracks, and you come up with goals. Those goals ultimately get put into a place of a financial goal for the year, say. And what we run internally here, which I've run at previous companies, is that it's kind of like a 3-part process on forecasting. You start with a plan at the beginning of the year. So even though I keep talking about business model, you do need an annual plan, especially as a public company. It gets approved by the board. That's what we're held accountable to, and we actually have to report on. The annual report on it, meaning like if we have a corporate bonus that's tied to performance as a public company, the elements of that bonus are publicly disclosed at the end of the year, right? And oftentimes, though, you want to have corporate performance that is tied to what's going to drive the business forward. Your corporate bonus is going to tie it. So oftentimes, like for us, that's ARR and operating margin. And so that stuff gets disclosed later. So we have an annual plan that gets locked in at the beginning of the year and does not change. We then have what we call outlook, which changes at the beginning of every quarter. And so think about this. At the beginning of the year, your outlook and your annual plan should be the same. At the end of Q1, you have your plan number, which is the whole year, and you have your outlook, which is the actuals for Q1, and then your new, perspective on Q2 through Q4. And then we then have forecast, and forecast changes every single week. So think about the drumbeat: plan, outlook, forecast, right? You then have operating metrics, which I like to put in what I call a Padre framework, which stands for pipeline, acquire, deploy, run, expand. And then you can add PPM, which is product, people, money, which is really, okay, you have your forecast, but what is the operational things you're doing to track all the activity that's there? And if you think about, that framework I just said, it kind of just runs from how do you create pipe, how do you close it, how do you, bring customers live, how do you actually run your system, and then how do you expand with them, which is your upsell motion. Then product, people, money, which is really your, financial results is the money. Product is kind of, you want to track releases and things across products that will drive future performance on pipeline and acquire. And then people is the HR component of it all, which is usually about hiring and things like that. That forecast, what we measure ourselves for accuracy, to get back to your question, is against outlook. And so at the beginning of every quarter, we track about 10 metrics that we are saying, here is our outlook across these 10 metrics. And then the goal is to be how accurate can you be from the beginning of the quarter to what you're going to result at the end of the quarter against those metrics. This is important because, if you want to go public, you actually have to have predictability into your business. So before Freshworks could go public, we tracked our forecast accuracy against outlook for 4 quarters until we saw against those 10 that everything was either green or yellow. And to the extent that, and we have certain bands for everything. For example, revenue is relatively predictable for us. So I think the band for revenue is 3%. ARR is not that predictable for us. So ARR is up to 10%, right? And revenue trails ARR. Then operating margin should be, and operating expense should be very predictable. So that's 3% or 2% actually. And then free cash flow is even more predictable. So that's 2%. Meaning that we got to fall within a band of 2% up or down, actually 2% or to the better on each one of them. Meaning that you can't miss revenue by 2%, but you can be better than revenue by 2%. If you are better than revenue by 5%, it just means you weren't predictable. And we would put that in a yellow, right? We beat it, but we didn't know we were going to beat it by that much. In order to actually go public, that forecast accuracy and predictability is tantamount, right? You can't go out if you can't do that, because every quarter we got to give guidance and you actually have to have an idea around it. And that's kind of what we put together for the board on terms of readiness. And we tracked it every quarter. And as I said, for 4 quarters, until we could get to the point for 2 quarters in a row that we felt, okay, we're really ready. That's the way I think about forecasting. I think it's incredibly important, right? And clearly, if you have a business that you put a forecast out and you're just crushing it every quarter, you're like, wow, it's great. We're not good at forecasting, but we're just doing so well. The reality is that might happen for a period of time, but what happens when it changes, right? And when it flips to the opposite side, because everything does at some point or another, that's when you're like, how do I have intelligence into the business to be able to make decisions so I don't get too far in front of my skis and something really, really bad happens? And that's why it's really important to be able to forecast accurately.
Gotcha. Thank you. Pivot a little bit to the concept of like misconceptions. Do you see any common financial misconceptions that executives, like, is there a common, like, you hear this all the time, this is one of the biggest misconceptions about finance from executives or team members?
Yeah, I mean, I think when we use the word finance, the misconception is that they're like the back office, folks who are kind of there to think about budget. And if that's the reality in the company, then I think that's kind of a wasted role. They've got to be a business partner to help drive the business and make the right decisions. And it's a job of, say, FP&A to go design organizations that get that kind of respect, so you get drawn in to be part of teams. The thing that sometimes I struggle with is really, when I think about drivers of the business model, making sure, how do I make sure the management team is fully aligned with what the drivers are? And then within that, how do I make sure that gets filtered down, right, to the different constituents within the management team? And that's the thing that it's a constant, because, team members change, initiatives change. And how do you make it so that, the CFO isn't mandating something, but everybody's really has that in the back of their mind, right? That this is what's going to drive for performance. It's like, I don't know, Jason, our stock dropped a couple of earnings ago, and we got on all hands, and everybody, like, all these questions are coming in. They were shocked, like, oh my gosh, was stock drop? And I was like, well, guys, we changed our guidance, right? I was like, yeah, but what does that mean? I was like, well, that means that we're not going to do as well as we thought we're going to do, right? And the real challenge for a CFO in my role is like, how do I make sure everybody understands how everything boils up, and that how their job, how could they potentially in their one job influence the end result, right? Just really throw it up there. And that's something I just don't a lot of companies aren't great at. A lot of companies, try to solve this through OKRs or something else, but those things get diluted over the year, and initiatives change. And so that's why I say it's a constant. It's a kind of a constant thing that you have to keep educating and keep reminding and things like that.
Yeah, and hopefully to the audience here, I want to give a note on that to the MBA audience here. For those of you that have either completed your MBA or in the middle of it, pay attention, because there's a lot of stuff that you get in that through strategy mapping. If you studied the Southwest Airlines, it talks exactly about that, and that's something that I personally have had experience being able to tell my team about how to map that experience from an employee at the ground level that could be working on an assembly line, how that translates to what the overall strategic objective is for the company. It's very important for your team members to know that. And there's a lot of benefit out of MBA programs to kind of show you that and teach you that through some case studies and what Tyler's talking about today. I have another,
Jason, I think you're great at it, because you say you have like a bunch of IC1s and 2s in different roles, and the job every day is pretty structured, right? And what they do, but then how do they look beyond their job and look at their managers and their managers' managers to see why that actually matters, right? And then what is the bigger picture on what, and how they fit into that bigger picture. And I think you've done a really good job at making sure you bring in everybody on the team to really paint that picture for them, because they then know what the end goal is. And then they can tie it back to, why am I doing my activity every day, right?
And thank you. And I directly contribute that to to be honest, my MBA experience at University of Oregon. So go Ducks again. I have another direct question from our most interactive listener. I'm going to give Max some swag. This comes from Max Green again. I think he wants your job. So look out, he's coming.
That's fine.
What is your view on getting a CPA or CMA in addition to an MBA if you do not come from an accounting background in corporate FP&A? Do you think it's a requirement to become a CFO? What are your thoughts?
No, I don't think it's a requirement at all. I think if you look at CFOs today, there's probably 3 different tracks that they come from. One is from the traditional accounting, and oftentimes they end up looking a lot more like back office CFOs, who which is fine. I have a lot of friends who are kind of more back office CFOs. They don't own a lot of the operations, but they definitely get all the compliance stuff done. You have then CFOs come up mainly through the FP&A side, and they're much more kind of business model CFOs, but they understand the accounting side, but understand the drivers of the business model. They tend to be still pretty relatively, financially pretty deep, but not necessarily accountants. And then I think the third track typically comes from kind of the corp dev side or the investment banking side. You bring in folks from outside, and they're really much more strategic CFO minds. They end up having very, very strong chief accounting officers underneath them who are really running all the accounting stuff, right? And they kind of know enough to be dangerous. If I was gonna,
know enough to be dangerous, yes.
Know enough to be dangerous, which I think is also like a really important thing for any role that you're kind of owning. You need to deep dive to an extent so you understand that job, and that you know enough to be dangerous on anything that you are managing. If I was starting like from an ops side and going in the whole CPA side, I probably would not do. I don't know if it's required, because the actual debits and credits and stuff, you're going to hire people who know that. I would, if I said I'm going to go get something, the MBA is huge and that helps. And if you felt financially you needed more, then I'd get a CFA, and really understand kind of more the business model and holistic P&L and balance sheet drivers. What's interesting about the CPA stuff, like you have these accountants that come up, kind of like what we just described as, these kind of an IC1, 2 level person. They're going in auditing, right? They learn through auditing, and they're auditing like accounts, and they're really just looking at, reconciliations and stuff like that, where sometimes, those level of folks, they don't even see a P&L or balance sheet in holistically to understand like drivers of that whole, kind of set of financials until they get to say a manager level. And like, again, you could skip that whole piece and go straight to, you want to go to the manager level. And for that, it's more of an understanding of, okay, higher level financial acumen.
Yeah, great. Thanks for that. I have a question that just came in, and this is actually a good one. I want to cover it. How does the CFO view the expense of brand marketing when you may not be able to directly attribute it to sales or growth or correlation and not causation?
That's actually a fantastic question. Um, and it's actually really relevant for us because if you look at Freshworks, I'm guessing before you saw this hit your calendar and before you did any Google searches, you had no idea what Freshworks was. And I've got people come up to me and be like, "Hey, are you the food delivery business?" Right? Um, and the reality is because we don't actually have a lot of brand recognition. Part of the problem is we have Freshworks, which is the company, but then our products are Fresh Service and Fresh Desk and things like that. There's actually a company out of Canada called Fresh Books, which is actually an accounting business, completely unrelated to us. My opinion on brand marketing is really interesting because it's timely because I literally approved something this morning on that. Is that you cannot tie it to pipeline, right? And you cannot tie it to it's very, very difficult to tie back to any specific measurement of performance. However, there are ways to tie back to brand recognition, but it doesn't happen overnight. It's like trying to change the direction of a huge ship, right? You slowly start doing it, but if you don't turn that wheel, it actually never changes. And that's kind of my opinion on it. That if you don't start, you'll never finish. And if you don't fund it and protect some budget, it'll never be used. Because whenever you're making a decision in near term, there's always going to be pressure to hit that top line number. And that top line number, the main way to get it is, either create pipe or have people who can close pipe. And that is all much more, short term. The long term, though, that short term gets much easier if you've baked these seeds and built kind of the foundation that feeds over time. And so what we're trying to do is, and what I try to do is make sure that, say, marketing, which typically owns it, under their corporate marketing arm, which is going to be different than field marketing, going to be different than demand gen, is funded for kind of continuous brand. Now, the thing that you got to pay attention to is like, what is your brand? Right? You brand marketing and corporate marketing, like you can go do it, but you got to figure out what is it first. And that one is much more of it's much more strategic and it should be much more long-term because you can end up wasting a lot of money if you try to build a brand and then all of a sudden the brand changes. And you're like, okay, now we got to pivot, right? And you're trying to get people off of something that you just spent a lot of money trying to get them on. And so that's why you got to tread a little bit carefully on it.
Yeah, great question. Whoever, that was an anonymous question, but should have put your name with it. I would have given you a shout out. That was a great question.
That was good.
I want to pivot a little bit. We have a few minutes to the people part of the
like
people.
every billboard you see is all brand marketing, right? Yeah. There's no way to attach an eyeball of somebody who comes in on a lead because they saw a billboard, unless you're going to ask them, how'd you hear about us, right? Which is kind of
the QR code.
Exactly. Yeah. But they actually do add up to something over time.
Yeah. Great. I want to pivot a little bit to the people part because that's, in my opinion, I have years of experience as executive. The most important aspect of what makes successful executives is how they are as leaders, not necessarily how great you are at working a spreadsheet. I wanted to ask you some leadership questions. This is the lesson question. What's the most significant lesson in your career that you've learned as a leader, and how has it influenced your approach?
I think the most significant lesson is to make sure you're hiring people who are better at their jobs than you are, right? And it is interesting because I still have leaders who get very nervous about maybe hiring somebody who's better than they are. Mm-hmm. And to be able to demonstrate that, the best possible option is that they're just going to make you look better because they're doing a better job. And if you are insecure about hiring somebody that good, then you're probably in the wrong job yourself, right? And so for me, I've always tried to put that lens on it and making sure I'm hiring somebody who's going to be much better at their domain than whatever I could be on it. And then in turn, they're going to make my job a lot easier because they're going to completely own. I think the biggest risk is in the areas that you don't necessarily accomplish that, or you make a risk, is that the extra time that it takes in having to dig in on functions where they aren't necessarily being owned by a leader that you don't have to worry about can really prevent you from executing yourself, right? Because when you get to certain levels, I mean, as Jason probably knows, it's not like I'm making a lot of decisions, right? My job is to manage teams and to make sure that the company as a whole is moving forward. And then specifically, I got to have a lot of interaction with board, with investors, all this other stuff. But on the day to day, like I need to count on my team members to have the right mindset to go make the big decisions, and move their teams forward, which then moves the whole company forward. And when that isn't happening, then the risk gets just dramatically higher. The second thing, and it depends on size and scale, is making sure that there's always a thought of what happens in the proverbial hit by a bus scenario, right? If you have a bunch of different functions that are being managed, you're relying on those leaders of those functions to run them. What happens if that leader doesn't show up the next day? What do you got to have it in the back of your mind of how you're going to get by? And so that's the way I think. And I've had lessons on both where I wasn't prepared for part of that. It makes life difficult. I've had lessons where I've made the wrong hires. I think in general, though, the other thing that's really difficult as a human, when you've made the wrong hire and you've got a sense of it, make very quick decisions to move on, because it's just going to be much more difficult. And I've been guilty of that in the past as well.
Gotcha. Thanks. This one came in from a participant, me. So this was unscripted, but I'm going to ask this. I'm curious. Who are some of your influences for leadership? Like, are there either figures in your past or people that can follow now? Like, who influences you for your leadership style?
I think the most I've been influenced on is people I've worked for, right? So there's a CFO community, and there's folks within that community of folks that I really looked up to. But the reality is mainly the people that I've learned from in day to day. I've had whether it's luck or just the reality that, I don't know, I said I've been with 5 private companies. I've also been with 3 public companies in Siebel, NetApp, and Cooper's wasn't public, but very large company. And so just a lot of different folks that I've been able to learn from and be able to learn good and bad, quite frankly. I've had some bosses that, were not necessarily scalable, but I've learned maybe the most from. One was Jerry Wong, who was the CFO of Poet. And he just exposed me to everything and got me involved in everything. He never became like a big, huge public company CFO, but like what I saw him do there was amazing. And then I contrast that with Steve Gomo, who is the CFO of NetApp, who I got to spend a lot of time with, and be able to learn completely different approaches to jobs, right? I remember just as a side, I had a conversation with Steve Gomo. I was there. I remember my company, Decrew, we got bought by NetApp. It became one of a couple of controllers within the company. And I was like, I went from this hardware encryption business, which I knew pretty well, into this storage business, right? Trying to figure out the difference between NAS and SAN type of storage and all this kind of stuff. And I was like, Steve, like, how do you like stay on top of all this? Like, you're a CFO, like, but you're the executive sponsor for all these things. Like, how do you do this? He's like, you know what, Tyler? This is how you got to know enough to be dangerous, right? He's like, what I immediately did, he had come from HP. It's the same thing I did there. I found the best SC in the entire company. And I said, every month, and I put a calendar meeting on, and it's going to 2 hours a month that he is going to brief me on every single new product thing and do demos with me and just walk me through it personally. So that when I go engage with customers, again, I know our products, I know enough to be dangerous, I know how to engage. And it's these little teeny bits of advice that don't sound like rocket science stuff, but you don't necessarily always think to go do that realize, okay, that's how executives actually perform, right? And that's how you can actually figure out how to do everything without necessarily being deep in everything. And I've taken little snippets like that from a lot of people that I've learned from. And I also take snippets from, what not to do as well. And so I guess, I don't know, it's a long answer that no one specific, a lot of little things. And a lot of people that I've really, really admired that I've worked for. So
great. Thanks, Tyler. Okay, we got time for one last question. This one came in from Michael Jordan. Is that the Michael? No, it's not the Michael Jordan. It came in from Michael Jordan. I'm going to read it verbatim.
Michael B. Jordan?
Could be. I understand the efficiency value of having a combination CFO COO role. That said, both roles have traditionally been full-time. What skills does an executive who's both CFO and COO need in order to make sure all bases are still covered?
Yeah. Well, skill set, I think you got to be, you got
Time
to have an
management?
operation. Yeah, time management. Operational mindset, like really, remember I described earlier, you got to be able to put both hats on. The COO role up and has a lot of go-to-market, kind of responsibilities. And if there's usually within a company some tension, it's usually between, say, finance to one side and go-to-market on the other, right? And there's a whole series of checks and balances there. And so how do you create structures that you can have that checks and balances, but you're really kind of trying to run both? And in order to do that, you have to be able to put yourself in people's shoes and be able to understand, okay, why are they doing certain things? And I encourage folks to take the approach that everybody has best intentions. And then when you take that approach first, then you're like, okay, then why are they doing this, right? Not everybody always does, but you got to take that approach to start. Secondarily, I think that it's probably if you're running both and you don't have the functions, but you're a big company, then you're not going to be successful. The reality is you have to have great leaders underneath you, and then you're really just trying to help manage, right, at the end of the day. And so this gets back to making sure you're hiring really, really good people, and then also making sure that you're deciding if they're not the right people, you're deciding quicker rather than later.
Well, we're out of time. On behalf of the Oregon Executive MBA program and the University of Oregon, and just myself, man, thanks for coming on and taking the time to talk to us. And this has been phenomenal.
No, it's been a pleasure, Jason. Thanks for having
We
me.
have
And I'll say it, go Ducks. Yeah.
Thank you. Yeah, we have some swag for you. I'm going to send it, but then I'll just pick it up from your desk because I don't know, as a Cardinal or BC, it may not go over well. You're happy to pass that off to me when I come by.
All right.
Thanks, everybody.
Thanks, everyone.